What's going on, traders? Todd here. It is now Tuesday the 7th, and we just put a little hedge on the Active Opps stock desk here, trading analysis, and I'll show you why we did it. I'll show you the position, and kind of give you a story, show you the sort of the rotation that set up this rally, and then those same dynamics that set up the rally that's been in play for over a year are starting to shift. And I'm a touch concerned. As much as I've been very bullish and more bullish than most traders, investors, analysts out there, I'm getting a touch concerned in here, and let me take you through. So, again, we put a hedge on in the NASDAQ just now, and I'm going to share it with you. But I want to look at the rotation. We're seeing a rotation into value, and that is going to almost certainly be a result of the persistent inflation numbers that we're seeing, and the realization that the Fed's not cutting rates more than once, maybe twice, if at all. And that's driving sort of this rotation into the value. We're in a seasonally weak period here. Another reason. So let's take a look at that rotation that's sort of driving my concern. Then we'll go to the technical position in the NASDAQ. Then I'll show you the position, and then we'll get you out of here. Okay. Let's go this one right here. Okay, big monitor. So we're looking at the NASDAQ here from the end of 22. So, here's the sell-off, 22, carve out a low at the end of 22 into 23, and here we are now. So I've included and attached two relative rotation graphs, which are super key to, gauging, what's going on below the hood in the market. And the two RRGs that I'm looking at here are the Vanguard Value ETF, which is VTV, and the VUG is the Vanguard Growth. On top of this are your 11 sectors that make up the S&P 500, the American economy. Okay, so I want to look at the rotation that set us up into a low when so many were so bearish. And if you express the bullish bias back here, you were kind of considered a leper. But that was absolutely the right time. And as the S&P is bottoming, end of 22 and early 23, what do you see on the growth value? On the rotation, you see Vanguard Growth in the bottom left heading up out of lagging, pointed towards improving. And on the same side, the flip side, you have the Vanguard Value ETF, which has been in a much stronger position over here because the stock market was falling, right? Vanguard was in control as interest rates are spiking and interest rates are going up, bonds selling off. So value is in control. And then in the end of 22, look what happened. Value started to fall out of favor as the growth emerged from monthly lagging up into improving. And if you look at the sector rotation, what was happening? In that same period, the end of 22 and into 23, what was rotating up and out? XLC comms, XLY consumer discretionary, and XLK tech. Growth is now rotating in after being out of favor during that sell-off in 22. And what's rotating out? Staples, utility, healthcare, real estate, industrial's still hanging in there, financial's not doing much, okay? And then energy also had a huge outperformance in the inflationary spike. That guy started to rotate out as well. All right, so let's keep it moving forward here. So this is the beginning of 23. And what's happening? Watch the growth. Growth continues to go. XLC rotating in, comms, tech, even consumer discretionary was lagging, but got a little bit of a hook here. And then right into August of 23, we saw all three offensive growth guys, tech, comms, consumer discretionary, heading into the top right. That is indicating that you have relative outperformance, relative strength, and relative momentum to your benchmark S&P, and everything else is rotating out. Industrials, materials, financials, healthcare, staples, utilities, energy, real estate, all rotating out. Then we got the sell-off at the end of last year, okay, and that started to give pause to your tech, comms, and consumer discretionary. It started to put a little bit of a hook in the value guys. Same thing, growth started to hook down here, value started to hook up, okay, and then we kind of righted the ship a little bit. And here we are now at the April highs. So what's happening? Well, the move up, okay, that began here had already seen, okay, a rotation out of value. But as soon as we get into the beginning of 2024, you're seeing the value trade hook up. And that is no doubtedly related to US yields staying bid on the idea that the Fed's not cutting. So value starting to head higher. And what's going on in sector rotation? Well, we have tech and comms in monthly leading dropping, where consumer discretionary didn't even make it into leading. And that has a lot to do with Tesla and Nike and a few other weak large caps in consumer discretionary. And as we fast forward to where we are now, we have tech and comms heading lower, consumer discretionary and monthly lagging. And look at what's moving in: industrials, materials, healthcare. Healthcare started to take a little bit of left turn. Energy, staples, utility, and real estate, as value is trying to make the hook over to the right, as growth is still trying to make the hook over to the left, out of favor. So I am aware of the rotation that's happening. Okay, I've been very bullish and we've done well, but this is opposite of the situation where the rally was born. Growth rotating up and in from monthly lagging, in Vanguard value rotating down and out from monthly leading. Okay, and this is again how you like to see the offensive sectors positioned to start the rally. So do we throw the towel in? The fact remains, guys, that tech and comms are still to the right. We're losing some verticality here, which is momentum. We're not really losing any of the horizontal distance here, which is relative strength. That's more important. We're losing momentum to the benchmark, but we're not quite losing relative strength. And that's the same with growth. So yeah, we're dropping. Growth is trying to suggest that we're going to rotate out. Value, specifically in defensive names, healthcare, staples, and utilities, are trying to rotate up, but they haven't quite gotten the hook over to the right. More cyclical names like industrials, financials, materials, I would say real estate, they have rotated up and in. So that's good. I'm not abandoning my bullish bias, but we are hedging. Okay, so I am long. We have added positions to our Active Opps desk at Trading Analysis, but I am concerned about the technical position of the market. Now, here's one of the wave counts I'm looking at, and my concern here is the rally that we've seen since this is the end of 23. And then, of course, I just showed you as the value trade was trying to rotate in. We've lost a lot of the sub-industry groups within tech. Semis have even sort of lost some relative strength. We're starting to roll over, and I'm wondering if we have a false break here in the X wave, and we're going to drop on down and retest the late 22 highs, which go early 22 highs, I should say, which go all the way, I should switch it to a weekly, go all the way back here, 21. The S&P is 22, the NASDAQ's 21. So we have, the prior all-time highs here at 16,765. So as we get further down into the daily chart, keeping in mind that prior all-time high, we are now up against the critical retracement of last resort, which is what I call, that's the retracement of last resort. That's at 18,135, and that is the 786 retracement. So we are trying to get above it, and this is the same level that you see in Nvidia and the S&P, obviously in the NASDAQ. And what's interesting, we saw rates drop pretty sharply the last couple of days, and it really didn't give equities the break higher that we needed to break through resistance. And of course, as I move back over to this guy, and if we flip down to the weekly chart and break the RRG down to a little smaller, let's see what we're doing here over the last, let me just flip you out of the way. Give you a little bit more There we go. So here's the sell-off in the NASDAQ over the last couple of days. What are we seeing? We're seeing a definitive move into utilities, staples, cyclical materials, energy. We added some energy names here. Consumer discretionary is doing nothing. Real estate is staying under pressure because of higher rates. Healthcare is not really doing anything, but you are seeing a move lower in comms, tech. Consumer discretionary is even trying to roll over, even with Tesla starting to find a low. But here's where we are right now at the hard red edge of the chart, which, again, tech falling out of favor. Comms is acting well. There's some good strength even with the meta news, but Google's acting well, Netflix acting well, Spotify acting well. But there's a pretty good theme in the more cyclical value, non-tech names. So for that reason, and this technical level right here on the NASDAQ into the 18,135, it's the same thing in Nvidia. And it's funny, the members are getting on me like, Todd, let's get bullish, because we were watching Nvidia break up through the 920 level, and then there was news that Stan Druckenmiller dumped his position in March. He's like, conveniently, he's like, well, the market got wind of what we already knew, so he sold in March. I'm like, okay, Stan. All right. So he sold, and then Nvidia sold off overnight, but the same thing. So we're into the 786 retracement in Nvidia off of the March highs. So that's going to be a big level. So, for all those reasons, I don't want to abandon a lot of our positions, but we did just put a QID hedge on, which is a 2x inverse S&P short, to hedge our new Active Opps stock desk, which is pretty awesome. We just launched a new members area. Let me just show you that quickly. It's been a year coming. We have new technology, brand new members area, trading analysis. So there's the programs. Click here to access all of the offerings of the membership here at Trading Analysis. And boy, it looks nice. So that's the stock portfolio that we run, and here's the options desk that we run. Okay, so hopefully that helps, guys. Check us out at tradinganalysis.com. If not, I wish you all the luck in the world. I'm not saying I'm outright bearish. I'm just saying I'm concerned. Market's at a standstill. We're not getting any cuts. We're going in a seasonal period. We have rotation into value. We have the S&P NASDAQ moving into a possible B wave high. I think it's prudent to risk a little bit of the portfolio and hedge. All right. Hope that helps, guys, and we'll see you later. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.